India's silver imports have just reached record levels. Banks are trapped short and need 5.5 years of every ounce mined on Earth just to cover. Analysts are now calling for $300 silver, and it might happen even sooner than you expect. Today brings us some insane updates on silver. But what is actually happening? Well, let me explain. Disclaimer: what's happening in the silver market right now isn't just another rally. It's not speculation, it's not inflation fears, and it's not retail traders chasing shiny objects. What we're witnessing is the systematic unraveling of a decades-long manipulation scheme that has finally hit its mathematical breaking point. And the cracks are showing everywhere you look. Let me walk you through what's happening behind the scenes, because when you connect all these dots, you'll understand why some analysts are now calling for $300 silver, and why that might actually be conservative. Right now, silver is consolidating around $90 an ounce. Investors are having to adapt quickly to this new reality, because it might not take long before we see another 30% move higher. But here's what most people don't realize. The price you see on your screen, that $92 COMEX quote, is becoming increasingly disconnected from reality. We're watching a bifurcation happen in real time between paper silver and physical metal, and that gap is about to become a chasm. Let's start with the fundamental problem that has no solution. Major banks are currently short silver to the tune of $4.4 billion. Now, that number alone doesn't tell you much. But here's where the math becomes absolutely brutal. Industrial demand already consumes 60% of annual silver supply. Solar panels, electronics, medical devices. This silver is spoken for before it even comes out of the ground. These short positions would require 5.5 years of every single ounce mined on Earth just to cover. Not 5.5 years of available supply, 5.5 years of total global production. Think about that for a second. Every ounce for over 5 years. While industrial users are simultaneously trying to secure that same metal for actual production needs. This creates what can only be described as a structural doom loop. Every attempt to cover these short positions pushes physical prices higher. Higher prices make the remaining short position more expensive to maintain. More expensive positions create urgency to cover. That urgency pushes prices even higher. It's a mathematical trap with no escape hatch, and the people caught in it know it. Drop a comment below and tell me, do you think the banks can escape this, or are they completely trapped? I want to hear your take on this. And we're seeing the desperation play out in increasingly obvious ways. Over the past 2 months, traders have identified what's being called the Mesa Formation, a new price capping technique where banks repeatedly attempt to smash down prices at key levels. It's the same old cap and smash strategy, but deployed so frequently that people have lost count of the attempts. Yesterday was particularly revealing. 237,000 futures contracts traded at the COMEX, yet total open interest actually dropped by 442 contracts, falling to 151,000. If massive trading volume paired with declining open interest during a significant price move doesn't scream manipulation, it's hard to imagine what would. The playbook is transparent at this point. The CME keeps hiking margin requirements to shake out long positions and force liquidations. Bank of America and Citigroup continue suppressing paper prices on the COMEX. There's even evidence suggesting that the gap between silver miners' stock prices and the underlying metal price was deliberately maintained to coordinate a maximum damage attack on options expiration day, which happens to be today. For decades, we've watched miners get hammered on these specific days. The pattern is so consistent, it's become predictable. But here's the thing about manipulation. You can manipulate paper prices temporarily, but you cannot manipulate physical supply that doesn't exist. And that's exactly the crisis unfolding right now. 15 million ounces of silver have been moved from the CME to the London Bullion Market Association to put out fires. That's not normal market activity. That's emergency triage. Former JP Morgan executive Robert Gottlieb's latest update confirms that 90 million ounces have made their way across the pond as the historic short squeeze and physical supply crisis intensifies. And even with all that metal being shuffled around, silver lease rates are still sitting at 5.5% with silver in the 90s. The market is screaming that physical metal is scarce and getting scarcer. Meanwhile, the US Mint just dropped a bombshell that should have everyone paying attention. First, they halted all silver sales in the face of unprecedented demand. That alone was significant. But now reports are emerging that the Mint has begun canceling silver orders that were placed on Tuesday before the halt was even announced. Has silver already become unobtainium? That's not hyperbole. That's a legitimate question when the official government mint can't fulfill orders. If you want to stay ahead of these developments as this situation unfolds, hit that subscribe button now. Things are moving fast, and you don't want to miss what's coming next. And it's not just the mint. APMEX, the largest precious metals dealer in the United States, has instituted emergency measures that reveal just how tight supply has become. They've implemented a $10,000 minimum order to control volume. They've narrowed minting to only a handful of products. They've halted pre-sales unless delivery is guaranteed. Shipping delays have been extended across the board. In their own words, demand unlike anything we've seen in years. When the biggest dealer in the country quietly restructures their entire business model to ration supply, you're not watching normal market volatility. You're watching the early stages of a physical squeeze before the mainstream headlines catch up. And here's what makes this situation truly unprecedented. The demand side is accelerating just as fast as supply is tightening. India's silver imports have just hit record levels, adding massive Eastern demand to an already strained market. But the real story is in industrial consumption, and one statistic tells you everything you need to know about where this is headed. Silver now accounts for 29% of solar panel costs, up from just 3.4% in 2023. Read that again. In roughly 2 years, silver went from being a minor input cost to representing nearly a third of the total cost of solar panel production. This isn't a gradual shift. This is an exponential change in the economics of the world's fastest growing energy sector. Let me know in the comments. Did you realize silver and solar panels went so crazy in just 2 years? This blew my mind when I first saw it. But what's interesting is that solar manufacturers can't substitute away from silver at scale. The technology requires it. And with governments worldwide pushing aggressive renewable energy targets, this industrial demand isn't slowing down, it's accelerating. That silver is already spoken for, already allocated to production needs that can't be postponed or canceled. So here's where we stand. Banks defending paper prices at $92 through margin hikes and forced liquidations, while physical premiums keep climbing and delivery times keep extending. The bifurcation is already happening. Physical silver is trading at completely different levels than paper globally, and that gap is widening. Some traders are now watching for silver to coil up for a breakout, with $100 possibly coming today or Monday. And while that would be psychologically significant, it misses the larger point. The technical levels don't matter anymore when the fundamental supply situation is this broken. There's no scenario where these short positions get covered at current prices. The price has to rise until either significant new supply appears or the shorts capitulate. Neither is happening at these levels. New mine supply takes years to develop, and at current prices, there's no economic incentive to bring marginal projects online when industrial users are willing to pay even more to secure guaranteed delivery. This is why some analysts are now making the mathematical case for $300 silver. It's not sensationalism. It's the logical conclusion when you have permanently trapped short positions, industrial demand that's locked in for years, and a supply base that's already fully allocated. Every covering attempt removes available supply from a market that has none to spare. So the end game here is becoming clearer. Eventually, COMEX will likely invoke force majeure and move to cash settlement only. They'll have no choice when the metal backing those paper contracts doesn't exist. But by the time that happens, physical silver will be trading at completely different levels that reflect actual supply and demand rather than paper derivative games. The Section 232 Critical Minerals update came and went with no market reaction, which tells you everything about how disconnected paper markets have become from physical reality. While traders watch COMEX screens, the real action is happening in vaults, in minting facilities, in industrial supply chains where actual metal changes hands. What we're witnessing isn't a trade anymore. It's trapped capital searching for an exit that doesn't exist. That creates persistent upward pressure regardless of what paper markets show in the short term. And as more market participants realize that physical delivery is becoming impossible, that pressure intensifies. The question everyone should be asking isn't, will silver hit $100? It's, what happens when the largest market participants realize they can't get delivery at any price? Because that's the scenario we're heading toward. Not next year, not eventually. The pieces are moving into position right now. Think about what a failure to cover looks like in this context. If the coordinated attack on miners fails today, if what looks like a deliberate gap down on options expiration turns into a breakaway gap instead, that sends a signal to the market that even the most aggressive manipulation tactics are losing effectiveness. That's when things accelerate. You can see it in the dealer behavior. You can see it in the mint actions. You can see it in the desperate price capping formations that have become almost comically transparent. The market is sending every signal possible that physical supply is in crisis mode. So when you see silver consolidating around $90, don't think of it as a pause. Think of it as the market trying to process a fundamental shift in the supply-demand balance that has no historical precedent. Industrial users competing with short covering, investment demand surging, government mints unable to fulfill orders, and major dealers rationing supply. This isn't about whether you believe silver should be at these levels. This is about understanding that the mathematical realities of this market have created a situation where trapped short positions, genuine supply scarcity, and accelerating industrial demand have collided simultaneously. And there's no policy tool, no margin hike, no paper market manipulation that can create actual physical metal. The bifurcation is here. Paper silver and physical silver are becoming two different markets with two different prices. And history suggests that when that happens, it's the paper market that eventually capitulates to physical reality, not the other way around. Know what you hold, because what's coming isn't another rally that retraces. It's a structural repricing of an asset that the market finally realizes can't be manipulated into existence with derivatives and margin calls. The math is simple, and the math is unforgiving. They can't cover. The supply doesn't exist, and price is the only mechanism left to ration what remains. But what is your opinion on this? Comment down below. If you're curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important silver update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.